Okay, so in today's lesson, I want to talk about the trader mindset and why it is so important in determining whether you're going to make it as a trader or not. Now, you may remember this pyramid, that basically this is how I describe the makeup of what makes a successful trader. At the top here of the pyramid, you've got the strategy. Most people spend most of their time trying to find the perfect strategy, which we know does not exist. I put down the strategy importance at about 10% of what makes up a successful trader. But of course, you've got to have a strategy, which are basically the rules of entry and exits. If you don't have a strategy, then you're just shooting from the hip. You haven't got a chance. But strategy is important, but not as important as you think. Then you've got the risk management. I put the risk management down at about 20%. Okay, risk management is very important. You've got to be controlling risk on each and every trade, as you know, and you have to have rules to help you abide by that. But the trader mindset, I think, is the most important part, and it's at the bottom of the pyramid. That's why I display it as a pyramid, because it is the foundations of what makes a successful trader. It's the foundations of what determines whether you are going to make it or whether you're going to fail. So do not underestimate the psychological factors that determine your success or not. So that's basically the pyramid. I don't know if those numbers are accurate, but I think you get the idea. Now I want to talk about thrill seekers. Okay, if you're coming into the forex market with this mentality, I tell you now, you are doomed to fail. But I don't blame you. If you only have to look around the sporting events on a Saturday here in the UK, every interval all around the ground, you have all these betting firms, the gambling firms offering their wares. Sign up now, bet on this next goal scorer, bet on the number of throw-ins and so forth. Because gambling is fun. It's why it's one of the most successful pastimes out there, the casinos. It's fun. If you're coming into the forex market with that mentality, folks, you are doomed to fail. You've got to put that aside. Trading the forex market, trading any market, is a business, and unless you treat it in such a way, then you are, as I say, doomed to fail. If you're one of those people that are coming into trading and you're trading here with your phone and you're looking at the prices going up and down, and you're looking at the P&L going up and down, making 100, losing 100, making 2, losing 2, and every time you're picking up the kids from school or you're out shopping, you're picking up your phone and you're looking at the market, that basically is a thrill, because it's exciting to see this money flow in and out. If you are of that mentality, I think you are going to be in an uphill struggle to succeed as a trader. So bear that in mind. And now I want to talk about some of the key mindset pitfalls that a lot of traders, when they come across from the get-go. First off, people think the markets are out to get me. People are trading and they're making money, they're losing money, and they start losing money, and they believe that the whole world's against them. Believe me, the forex market doesn't care about you one iota. It doesn't care about your positions unless you're trading with Goldman Sachs money or something like that. The markets don't care about you sitting there on your laptop or your workstation at home. They're not out to get you. The markets are there to facilitate you, and you have to know how, obviously, to take on the markets, but they're not out to get you. So get that mentality pushed farther from your mind as possible. The broker is chasing my stops. I often hear this. Every time you get stopped out and the market goes back in your direction of your initial trade, you're blaming the broker. The broker stopped me out. He wanted to look at my half a lot position or my one lot position. The broker doesn't care about you. He doesn't care about your trade. You must be trading, relatively small accounts to the big picture of the broker's profit and loss. He doesn't care about you. The broker is not chasing your stops. If you start to think that, then you start to think that it's a battle, it's a war. And obviously that creates all sorts of emotions when it comes to trading. You're feeling now that you're fighting a battle in a ring with someone and you want to hit punches back. It's not that. Trading is a business. So get that out of your mind. The broker is not chasing your stops. Only the big boys make money. This is a common mentality or common thought that a lot of traders come in when they're making some losses. They think it's only the big people. People must be making money, but it's only the big players. I can't make any money on my $1,000, $5,000 or $10,000 account. Only the big boys. That's not true. Many successful traders are trading with very small accounts, whether it be a 500,000, $5,000, $10,000 or what have you. It's not just the big boys, it's the people, it's the traders that basically know how to trade, control discipline, control their mentality, their emotional makeup. That's what determines the success of a trader, not the fact that you've got millions in the trading account. That is something that you need to quash as well. That is not the case. Big boys make the money. I don't have the brains. A lot of the educators and gurus out there will tell you this is rocket science, that you need a master's degree in economics or mathematics to become a trader. You don't. Trading is simple if you just follow rules. Trading is literally that, following a set of rules. You don't have to be a genius to be able to follow rules. You see them there, they're checked out, you just tick them off as they go. You don't need brains, massive brains to become a trader. Of course, in our education, we help you through all the nuts and bolts in very basic language as well, so it's all pretty basic stuff. You don't need, I say, a master's degree in maths or economics to be a trader. So get rid of that. Don't think you're losing money because you haven't got the brains. Chances are you're losing money, if you are losing money, because you haven't got the emotional discipline to take the markets. Okay, and I failed at everything else I've done in the past, and I'm going to fail at trading. This is basically a negative emotion. A negative emotion when you hit that string of losing trades. So it's another thing that's going to fail. I'm a failure at everything I do. The markets are going to just be reiterating that belief as well. Absolutely not. You've got to have the confidence when you come into trading. Have the confidence that you can succeed. If others are doing it, why can't you do it? And there's no reason why you can't do it. You just have to appreciate what's in front of you. Control your discipline, control your emotions, and you're in just as good a position as anyone else. And don't have these negative thoughts, because if you have negative thoughts, chances are you will fail. You've got to believe you're going to succeed. A runner wouldn't start the 100 meters under fire of a gun knowing that he's going to win, knowing that he's going to fail. He's going to run the fastest he can because he has a chance of winning and he wants to get his best time regardless of whether he wins or not. Exactly the same when it comes to trading. Negative thoughts are a killer. Now, these are the common mindset trading mistakes that people fall into. This is basically when you are trading. Okay, now trading is an emotional business. A lot of the educators will say, trade without emotion. It's impossible to trade without emotion because money is an emotional commodity. But you have to understand the emotions. You have to understand what you're up against. If you understand the emotions, then you're halfway there to not being sucked in or having a negative account, negative trading because of those emotions. So you need to be aware of the emotions. And these are the typical mistakes that common traders make. The fear of missing out. The FOMO trade, as it's called. Markets are moving up. You've seen it pretty much this week. We've seen the markets hitting new time highs, and there's traders out there thinking, oh, I don't want to miss out, I don't want to miss out. And they just jump in for no reason because they feel the market is running away from them. You've seen that cliche of the train leaving the station. You know, the train's left the station and you're running after that train to catch on that train. Chances are you catch on the train, it comes to a halt and back goes it the other way. So the fear of missing out. Should be avoiding that at all time. Have your strategy in place. You know when to enter. And if the train's left the station, no problem. The fear of missing out, the FOMO trade, greed, staying in the trade for just a bit more. Everything's come right. You've entered your trade. You're in profit. It's moving through nicely. And you think, well, I'll wait on a bit more. This is great. This is easy money. I don't have to work again. This is running away. Greed. Greed is the killer of a lot of traders. If you see your profit, if it aligns with your strategy that you back tested, don't be shy of taking profits. Greed is a big killer in trading any markets, basically, because you're staying in a trade for too long, trying to hit it out of the park. You know, don't be shy of taking profits. And the revenge trade, chasing the losses. Do you know what? I think this is the biggest emotion that traders fall foul of. It's the revenge trade. You're watching your trade, you're there, you're watching it on your phone, you get stopped out, and you think that's wrong, this market is definitely going up, all my indicators tell me it's going up, I'm going back in. But this time I'm going back in even more to get that money back. I don't like losing money, doesn't feel good. So you go back in and you take on a revenge trade against the market. You're taking it personally. Remember, the market is not out to get you, it's there to facilitate you. Don't fall foul of the revenge trade. It is the killer of most traders. You get stopped out, forget it, move on. We all get stopped out. It happens to be just part of the process, the law of large numbers. Some trades will make, some trades will lose, accept that. Revenge trade. Hitting the home runs over leverage. Very important. I always say that you should not be looking to hit the ball out of the park on any one trade. No one trade should make you. No one trade should break you. It should be controlled on each and every trade that you do. If you're trying to hit that ball out of the park, that means you're using excessive leverage, really high leverage, really high risk. You may make money. You may make money on 2 or 3 trades. You think this is great. I've tripled my money on just 2 or 3 trades. But I guarantee you, that will come back to bite you. Don't try and hit the ball out of the park. Steady, consistent gains with an equity curve that's going like that is far more sustainable than an equity curve that goes like that, because that's going to go back down like that before you know it. So don't try and hit the ball out of the park on each and every trade. Okay, so how do you control the mindset? How do you control these emotions, which exist in all traders, all discretionary traders as we are? It exists in all of us. No one's immune to these emotions. How do you control them? Well, first off, you've got to have realistic expectations. The market is not an ATM machine that's just going to hand out money to you every time you visit it. You've got to be realistic in what you can achieve when it comes to trading. What can you achieve? Well, I basically say that 4 to 5% on a monthly basis is a good return on investment. 4 to 5% on a compound basis is a huge return on investment. Remember, in fact, 5% I think is about 80% return on investment. Be realistic, and be realistic in that you are going to have losing trades along the way as well. Fully backtest and journal your results. This is really important, okay? If you backtested your strategy and you've got your journal, you know everything about that strategy. You know what to expect. You know that in the past you've had 5, 6, 7, 10 consecutive losing trades in the past because you've seen it in your backtesting. So when you have it in your real life trading, it's not going to alarm you. You're not going to start revenge trading. You're not going to start fighting back and doubling up, because you've seen it happen in the past, so it's perfectly acceptable to happen in the future. Backtesting is very important. So fully backtest and journal your results. There's lots of metrics that you can use to determine the success of a trading strategy, and then you as a trader, the profit factor expectancy. Again, separate lesson on that, make sure you check it out. But make sure you backtest and journal your results. Got to have a trading plan. You know what they say, if you don't have a plan, then you plan to fail. Basically, you've got to have a plan. If you're following a plan, a set of rules, and you're ticking them off as you go, then it helps control those emotions. You're not going to be making those rash decisions because it's not on your plan. If you're trading and you're trading outside of your trading plan, you should stop trading immediately. You should stick to your plan. If you haven't got the emotions to stick to a trading plan, then you shouldn't be trading. Would you be flying an airplane or driving around on the freeway with no plan, with not knowing what you're going to do if a car pulls out in front of you? Would you be flying a plane if you're not aware of what's going to happen, or you're not going to know how to react if the clouds come in? Of course not. You've got to have a plan, and then the emotions you're able to deal with the emotions. And limit your screen time. This is a big one. People spend hours and hours, weekends when markets are closed, in front of the screen. Screen fatigue is the killer, and also it affects the emotions as well. The emotions sitting there at the screen trying to make the money, you make wrong decisions with fatigue. If you're there at the screens for excessive amount of hours a day, you're going to be prone to those mistakes. So limit yourself to a certain amount of time a day. If you're obviously a shift worker or a day job, you might be able to do maybe 2 or 3 hours in the evening. If you are working from home and you are trading full time, make sure you limit yourself. Morning session, lunchtime, afternoon session, locking off. Go and do something else. You've got to get away from the markets, because the markets will basically cause you to make bad mistakes. if you are suffering from that fatigue. Mindset, get your mindset right, and the rest hopefully will fall into place. Hi there folks, hopefully you enjoyed that video. Hopefully you learned something there as well. Now don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like if indeed you liked it. Give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.